Breaking news. Lemonade, a publicly traded, tech-enabled insurance company, has added Bitcoin to their balance sheet. Everyone knows that MicroStrategy, Tesla, Square, and a whole host of Bitcoin and crypto-native firms all have Bitcoin on their balance sheet. But now we are starting to seep into non-Bitcoin, non-crypto type businesses. As you can see, they have officially confirmed that Bitcoin is on the balance sheet. Every public company is going to do this. What's fascinating to me about Lemonade, though, is that they're an insurance company. They spend a ton of time being conservative, thinking way out into the future, trying to underwrite what is the risk in various investments they make, in various insurance contracts they sign up for, and obviously the assets they hold on their balance sheet. And now we are seeing Lemonade go ahead and jump into the Bitcoin world. Now, it's not a ton of money, but still, what we are watching is that we are watching public company executives, whether they are the business executives or the financial executives, wake up to the fact that inflation is at 6.8%. And if you were sitting there with lots of cash on your balance sheet, that is a big problem. Your cash and your cash equivalents are just being eaten away. The purchasing power is eroding right in front of your eyes. And so most companies are likely going to take an approach like Lemonade. Well, I don't know if we should do this or not, but let's go ahead and maybe start with a very small bit. Can we start with something small? And so ultimately what we're seeing here is part of their latest filing shows us that they are starting to actually go ahead and buy Bitcoin on their balance sheet. Now, ultimately, what I think is very interesting is we're going to have to see, do their competitors follow suit? This is an upstart. Here's their balance sheet itself. And so if you go ahead and you look in 2020 at their cash, it ends up being about $571 million. That growth of their cash has been 111% over the last year. So that's their 2020 numbers. But as you continue to look through what they are doing, will they now be the crack in the armor? Will a ton of other publicly traded insurance companies start to follow suit? Obviously, it would be much easier if the large insurance companies did it and then the smaller ones followed suit. But to have one of the smaller ones do it first and then to see, do the big guys respond or not? I don't know. But what I do know is that every single public company, they have to have this conversation. What are we going to do with the cash on our balance sheet? Because it is melting away. 6.8% inflation is not a joke. And ultimately, how are we going to protect our shareholder value over the long term? Bitcoin is ending up being a solution for some, but eventually I think it'll be a solution for many. What do we think about Lemonade?
If they have $571 million of cash in their balance sheet, these are rough figures. If right now they would have lost almost $40 million in the last year alone
in purchasing power.
In purchasing power just by inflation.
Yeah.
They have to do something. They're running to Bitcoin.
Yeah, tens of millions of dollars of purchasing power being eroded away. And they don't have other investments. So if it's cash and cash equivalents, the cash equivalents aren't going to actually provide enough of a return if they're holding bonds or whatever in order to be able to account for the high rates of inflation. So what do you end up doing is you basically get to a point where you say, look, we can either go further out on the risk curve, like let's go buy stable coins and then earn high yield. Even if you're earning 6% on stable coins, you're still losing. Inflation is 6.8%, right? And so ultimately, maybe you can find someone who'll give you 7, 8, 9%. But again, the risk you take is the return you get. And so if you're taking tons of risk, then obviously you can get higher return, but you're taking more risk. And so you could also just buy Bitcoin, which sounds like they're doing that. Now, what I do find interesting is they're putting a very small amount into Bitcoin. And over the last, let's say, kind of 18 months or so, if you had just put 1 or 2% of your balance sheet in Bitcoin, it would have prevented the erosion of your entire balance sheet because Bitcoin has gone up so much, right? When it was down at $10,000 and then all of a sudden it goes up from $10,000 to, $40,000, $50,000, $60,000, that 2%, let's say you put 2% off the balance sheet, it goes up, 400%. That's 8% growth. So it negates that 6.8% inflation. So you don't have to do a lot of it. It's just simply saying that small little investment we make is a risk reward we're willing to take because if Bitcoin continues to do what it's done over the last decade, then it will protect our entire balance sheet, which is pretty cool.
Yeah, at this point, though, shareholders have to be like, if you are holding that much cash in your balance sheet, inaction is almost bad action, right? If you lose that much purchasing power in a year, you have to say you have to do something, whatever it is, but you just can't sit with cash. I mean, me personally, I don't sit with a lot of cash in my bank account because I know it just gets eroded away with purchasing power.